time, welcome to the Market Chameleon pre-market show and happy Wednesday morning, halfway through the trading week. How you doing, D?
Good morning, Will. How are you?
Great. Disclaimers up. Let's disclaim away.
Yep. Good morning, everyone. Before we get started, keep in mind, Will and I, Market Chameleon, we're not registered investment advisors. We're not broker dealers. We're not telling you what to do. We're just sharing ideas. If you need professional advice, call your registered investment advisor. Call your broker. That's what they're there for, to give you advice or provide you with guidance. There's a disclaimer. And with that,
seeing this morning
my screen. And as usual, if you guys are joining us for the first time, and we're open to questions. It could be questions on Market Chameleon tools, data, analytics. If you want to come over and share strategies or things that you're doing in your trading that's working for you, and you'd like to share it with the rest of the community, or the other way around, you saw something that you didn't expect, or it didn't work out the way you're anticipating, or something weird, and you wanted to share that, you're welcome to come on the show. We'll talk about it. We'll set it up. We'll look deeper into it. A couple ways to do that, to ask questions, is you could put your questions on that YouTube live chat. Will's monitoring them. He'll read them back to me. We also put out a link to the Zoom. If you click on that Zoom link, go over to Zoom, raise your hand. You don't have to turn on your video camera, but then you'll come on live and you could ask your questions directly. So while we're waiting for any questions to queue up, or anybody wants to come on the show, share their thoughts or questions, we'll start out looking at the pre-market report, seeing if we could gain some insights from there, maybe taking a look at a couple other reports. And if questions come in, we'll take those. Sound good, Will?
Perfect.
So we'll start out. This is the pre-market report. These are stocks that are trading in the pre-market hours. We have the most active stocks, biggest percentage gainers, biggest percentage decliners. I'm coming down here and I see 54 stocks made the percentage gainers list, 57 on the decliners. Really a mixed bag from that perspective. Let's take a look at the S&P 500 stocks to see if we see a similar situation there. So I'm going to use the filters above, which controls the list of stocks below. And I'm going to drop down this filter in ETF. I'm going to select SPY. By doing that, this list will get filtered by SPY components, or the holdings in SPY, which are the S&P 500 ETFs. So let's click there. And here I see 8 stocks made our percentage gainers list, 11 on the decliners list. So from this perspective, still mixed bag, slightly more stocks down than up, but the list isn't huge, kind of mixed bag. So I would say we're a little bit neutral to slightly bearish at the open. I'm going to come down here. Let's unfilter this list. And I think what we did was we started looking at some of the movers in the pre-market yesterday. And, then questions might pop up. Well, if you're looking at pre-market movers, some of them could be up, some of them could be down, some, on high volume. And I think that people also start trading on assumptions of what that means for the rest of the day. So some, folks out there, and I see it out there, in the tweets from my experience of questions that come in, that one strategy is people will look at big movers, big gappers in the pre-market, and the assumption is, well, if there is a lot of stock being acquired in the pre-market and the gap is really high, that could be an opportunity to buy at the open because there'll be continued pressure going forward. So kind of like a gap and go, right? Which is one strategy. And people will set up their filters, look for stocks that are doing that, and then looking at those stocks a little bit further and maybe, putting on that strategy. So
See, the strategy itself is called gap and go, right? That's what the
I
people
think that
call
the
it.
strategy, yeah, that's would be referred to as like a gap and go strategy. So it gaps up, opens higher, then a flurry of more buys come in afterwards and push it up even higher. So it's like and of course sometimes that will happen, that's going to happen. Sometimes it's going to happen in reverse, and you're probably going to have a big gap opening and it doesn't hold there, and it could come back down, which then it doesn't work. And I guess the question is really, we don't know if it's going to work or not, and maybe you could do more investigative research on instances that it works better than not. And I think news will come into play, maybe earnings and what's going on, because we did look yesterday at a couple big gappers, and over here, we have the symbols here, the percentage moves up, and this one here we see these alerts are telling us this one is moving on earnings, right? So yesterday it reported earnings after the market closed, so it's not a big surprise that there's a movement, because it's earnings, right? Binary event, and that looks like it's reacting to earnings, and you could click on the earnings, read about it. The N just shows the headline news. You could click on that, but sometimes you get an idea just from reading the headline. But this one's earnings, and we could go in there and by clicking on it, we could see historically how that behaved during earnings. And we've done that in previous shows. So what I wanted to do is let's gain some insights into what tends to happen to stocks that gap up or gap down. And what about if we even narrowed it down to less, some stocks are higher market cap stocks, some are lower market cap stocks. So we could really narrow down the list and just see like what tended to happen. And that's the question. So I'm going to come down here, and this is a history. So these are today's movers. So right now up top, I'm looking at today's movers. These are today's pre-market movers, but I could come down below, and I got a list, and it's trailing 20 days of trading. So like a month's worth of data. And it's looking at which stocks moved in a pre-market, gapped in the morning, and then what tended to happen afterwards, right? Like what did the stocks do after they gapped up? They opened up 9:30 or whatever time that they opened. Trading then started, more orders are coming in, orders, from institutions, from retail traders, they're all starting to flood the market. So what tended to happen in those stocks after we saw this price action in the pre-market? Did they continue higher? Did they reverse go lower? And we split it up the first half hour or by the end of the day, right? So that's the questions we're trying to answer here, is what did these stocks tend to do after the opening? So here, before we start filtering the list down, we could see that we split it up, the list of stocks that gapped up, and then the list of stocks that gapped down. So by using these two tabs, you're going to get a different list of stocks. So let's stay on the gap up for a moment. And if we took all the stocks that opened higher at the open, we're trading at pre-market, opened higher, and we looked at all these stocks, no matter what the reason it gapped higher, no matter like if it was a high cap, low cap industry, doesn't matter. If we took all of them, there are 2,336. It could be ETF, non-ETF, all of them. And we see that out of all these stocks, 54% of them after the open continued to move higher from the opening price. 44% moved lower from the opening price by 10 a.m. So for that first half hour of trading, right, if we use, let's just look at an example here. Here's Qualcomm. This is from yesterday. We see yesterday it was trading in the pre-market hours. It gapped up in the morning 2.3%. So that's our opening price. So now we have this reference price opened $169. So what happened to it the rest of the day? Did more, was there a follow through? Did more orders come in and push it higher? Or was that a selling opportunity? What happened? So we could see here by 10 a.m., this stock did continue higher. So from the opening, 169, half hour later, got pushed higher, another 0.5%. What about the rest of the day? If we just let the whole day, because that's when, all the VWAP orders kick in, all the institutional orders, all the ICE, everything, what happened? So here we see that by the end of the day, Qualcomm closed at 173, up another 2.4% from the opening price. So that's the statistics over here in aggregate by 10 a.m. So we see by 10 a.m., 54% were higher, 44% lower, on average gain 0.1%. By the close, 52% were higher, 48% were lower, for basically a break even. So that's looking at all of them. So let's try to narrow this down and say, well, what about stocks that had very big gaps, right? So let's look at our filters and let's take a look at stocks that gapped up 20% or higher. So if we took just those stocks that gapped more than 20%, so you could see the list down here, right? These are the symbols, the dates. These are the stats where you could see where it opened. This one opened 41% higher. This one was 256% higher. What tended to happen in these stocks after the open? So here we get a little bit of a different picture, that those higher gappers, the ones that really gapped up, the most, there were 28 of those in the last 20 days. And 36% of them, only 36% continued higher from the opening in the first half hour. 64% of those were lower, right? So many more were lower than higher when we compare them to this top group. And on average, returns were 3.7%. Some went up, some went down, but if you did all 28 of those at the open, you lost 3.7% on average over 28 stocks, right? What about the end of the day? Did they fare better or worse? So we could see here that 36% were up, 64% were lower, same, but it looks like by the end of the day, the drift to the downside continued, right, from the first half hour. So on average, they lost 6.2%. So what does this tell us? Chasing those big gappers in the morning tended not to work, right? That would have been hard if you were doing it, if that was your total strategy. Because you could see here that they, more often than not, they're down. And on average, the ones that were down, you could see were down by a higher amount than the ones that were up. So, and you could sort it here, So some of them, continued higher. So here's the best one. DFC opened up 41% and continued higher towards the end of the day, gained 16.5% from the opening. So that's the best one out of this group. If I go down, if I do it the other way, the worst one, here's one, BSFC, opened up 230%, but by the end of the day was down 39.5% from the opening price. Okay, so that's insights into the very big gappers, and we could go, the notes here, if those earnings or news, you could kind of hover over it and see that. So, here's an earnings, but the data is down here below. So let's maybe take a look at gappers, not 20%, but let's do 10%. And let's see the lower cap stocks. So now I'm going to use this 10%. Let's see if the lower cap stocks fared better on those big gaps. And, we're going to put it at 10%, maybe 20%. It's too high. Let's do it at least 10% or higher. So 10 stocks gapped up 10% or higher. And I'm going to pick market cap. Let's do it, I don't know, under 500 million. So these are very low cap stocks. So there are 30 of those. All right. So stocks under 500 million gapped up 10%. So these stocks might be a little bit less liquid, easier to push up. So if you have enough volume, if you have enough orders flowing in and a big imbalance, these stocks should be easier to push up than, like a $3 trillion market cap stock. So let's see what happened to these stocks. Again, 30 instances of that. So there are 30 of stocks that met these conditions. Gapped up in the morning, more than 10%, under $500 million in market cap. So here's the summary data. After the open by 10 a.m., 37% of them continued higher from the open, 63% open and went down by 10 a.m. for an average loss of 2.3%. End of the day, 40% of them were higher from the opening price, 60% lower, but a break even here. So which is telling me that, there are a lot of them that when they did go higher, they went higher by a decent amount. So we do have more of those went down, than up, but it was still break even. And let's just take a look at the data. And this is probably why I'm sorting it by biggest percentage changer. So you see here, one that was up 18%. By the end of the day, it went from $7 to $16. So it gained another 132% from the open. All right. Some of them gained another 17%. So some of them that, even though there are less of those that continued higher, some of those that did go higher went by very big magnitude. Right. So that's what we're seeing here. The ones that went lower, here's one that opened up already 230%. That one slid back down 40% from the opening price. So that's why that average is break even, because some of those to the upside really went up. So let's take a look at maybe from a different perspective and say, well, maybe the higher market cap stocks fared better, right? Maybe the lower cap stocks, they're less liquid. People are speculating maybe the higher market cap stocks fared better, and the indication on those might, the price action in the morning might be a better indicator in the higher market cap stocks. So we should see if the data supports that, right? So let's get insights on that. So I'm changing this. Now I'm going to higher market cap stocks. Let's go over 100 billion. And I'm going to put the higher market cap stocks a gap of at least 5%, right? Because they're not going to most likely move as much. So now I got 14 instances that meet these conditions, right? So it could go down here: Visa, UPS, Amazon, Netflix, and some of them I'm coming over there are earnings, right? So some of these are moving, you could see on earnings, but 14 of them. So what happened? Opened higher, right? 5%. So we could go over here. We see Visa here opens up 7.2% on January 28th at $220.94. We see that first half hour looks like it slid down. Maybe that's where people took an opportunity to take profits. But by the end of the day, it reversed and it was up 3.2% from that opening price. And this was after earnings. So this wasn't earnings event it was reacting to. So what happened to the group on average? 29% of them in the first half hour continued higher from the 71% were lower, average lost 0.6%. So even the higher market cap stocks trading the pre-market hours gapped higher. It still wasn't a good indicator of what it's going to do the rest of the day, because on net, on balance, it was more of an opportunity to take profits, right? That's what this is showing, that on balance, it was an opportunity to take profits in the morning. What about the end of the day? Did it do better by the end of the day? Because the end of the day, you got a full days of trading. Again, you're getting different types of orders kicking in, right? With your icebergs of EWAPs, time WAPs, all that. By the end of the day, only 43% of them were higher, 57% lower, but on average, they lost 1%. So what this is saying is that so far, even in the higher market cap stocks that look strong in the morning, trading in the pre-market hours, up, gapped up more than 5%. So, decent, significant percentage move. For on balance, they could not hold on to those gains. It ended up being a better opportunity to take profits in the morning than add to positions or actually enter positions, because even to enter positions on balance, you're better off waiting till the close of the day than jumping in on that in the morning. Okay, so that's insights for higher market cap stocks that gapped in the morning up 5%. So let's change this around a little bit. And let's look at, I'm gonna take off the market cap, and let's maybe see if there's a particular industry though that we think might fare better, right? So I'm gonna go here, and I'm gonna do an industry, and maybe in a biotech stock. So I'm gonna just out of here, I'm gonna pick biotech stocks. I'm gonna say, okay, all those, they're higher market cap stocks, there are lots of stuff going on, but maybe in a biotech stock, it's a better indicator, right? It's because that's healthcare, maybe they have really good news, and maybe that's when people really pile. So let's take biotech stocks, and I'm going to look at 5% or more gap. So what happened in those? So here are the summary stats on these. That same kind of situation, right? In the morning, we see they're trading in pre-market hours. There's enthusiasm, people buying stock. They opened up more than 5% from the previous day. How did they do? So 10 a.m., 38% of those went higher, 63% declined from that opening. On average, they lost 2.3%, right? So you got 16 of those instances down 2.3% on average. So that's 2.3% per instance, right? By the end of the day, the scenario did not change that much versus, the frequency of times it went up or down. 38% by the end of the day were higher, 63% of them were lower. On average, though, they lost 2.5% per instance, right? So that would be your average return per instance, down 2.5%. So what this is saying is that so far, everything we looked at, that was probably on balance over enthusiastic, right? Pricing in those gaps. So some of them didn't all go down, right? They didn't, of course, not all of them, but on average, or on balance, it was an opportunity to take, risk off the table from the long side. All right, so everybody see that, what I was doing?
Yeah, that's great.
Okay.
We did have a question from Mo. it was up. He was wanted to figure out where he could see maybe the inflows and outflows of money into a particular, I don't know if it was a stock or an ETF. We have so many chat. It's a question. Is there someone or somewhere I can look at inflows and outflows of money into QQQ on a daily basis?
So not right now. And I did bring this up before, and this is something that we are working on internally. So inflows, outflows into ETFs, and we're even going to individual stock level. But what we're doing now is, we do take in new feeds. So as we go along, as we grow, we subscribe to new feeds, right? So we have to purchase different licenses and feeds. And one of them is we do have a new contract with a data vendor with ETFs that we should be getting much, more data than we're collecting now. And we're looking at those inflows and outflows. And as we're integrating with them, at this point, we're still testing things, and we're finding, and this is the case whenever you do with any vendor. It doesn't matter. You could an exchange, any vendor, you find these exceptions and weird things and bugs, and you need to handle it and clean it. And we're still in that process where we're not completely comfortable, and with releasing it yet, because we're still seeing, either bugs or discrepancies that we're putting our own queries into the vendors. And we're dealing with a lot of times very big vendors, but we still, it's data, right? Whenever you're working with big data, there's going to be issues. So the answer is that you don't have it right now. You're not going to see that because we're not exposing it. And the reason behind it is that we're not yet, comfortable, because we already have known bugs and known issues that we need, answers to. And there are bugs that they are fixing for us. So until that happens, we're not ready to display it yet. But it is something that we will have it available.
So it's being worked on, and the data is being cleaned up, and something we may try to bring once we get it together and we feel comfortable.
Yeah, exactly. Because what happens is whenever we bring in data from a vendor and we start to, organize it within our database, we start running our own cross checks and analytics, and we start looking at it ourselves before we just pop it in there. And when we do that, if we see certain things that are strange, or that don't make sense, or there are bugs, or there's something obviously wrong, what we do is we go through a process of, we work with the vendors, we show them what we see. Sometimes it's a bug that they have to fix. Sometimes, because it's a new vendor, maybe we're referencing, wrong cell or something that they have to show us. Or, other times we're expecting them to have something they don't. So we have to get used to it, and we have to organize and clean it the best we can before we display it. And with data, you're going to always find something, especially when you're working with large sets of data. So I would say, I don't know if I can't give you an estimate, because we do also have dependencies, right? When we license data, we have dependencies on other vendors to deliver to us things that we're waiting on. So there's stuff that we're waiting on right now. We see progress, but it's not up to where we feel comfortable yet, running the analytics and using it from day to day.
All right, perfect. Well, listen, I put in the chat, we have a volume profile webinar with Donald Williams tonight at 6 p.m. Please register for that. Great job, Dima. Awesome.
All right. Thanks everyone for joining. Stay safe out there. Have a great trading day, and we hope to see